Hello everyone, and I hope that you are well. So this video is to address a common problem that's happening in majority of you. No, actually, no, maybe majority of you. Some of you just don't speak up if you're struggling or not. But what I've noticed is a common thing about when once you finish the course, because there's a lot of information to take in, you're sort of deciding what to do next, and then you think about you get given all the models. There's so many. I mean, you've got the daily pip, you've got disruption, inception. What else do you have? You've got James's model. Then you've got our standard confirmation entries. You've got risk entries. You've got higher time frame plays, lower time frame plays, as in you've got scalp, intraday, or swing. And it's so much to take in, and you're sort of thinking, okay, what do I do now? What is best for me? And a lot of you would come, especially for you guys in the mentorship, some of you guys would be coming and asking, what is best for me? And the straightforward answer from us is that I can't answer that question for you because I don't know your personal circumstance. But because you've taken in so much information, it's quite hard, and I understand it from your point of view, it's quite hard to know where to start. So if we start from the story of when I first was introduced to SMC, because prior to that I was trading purely a mechanical system using golfing candles, and it was fine. It was working fine. Um, when I moved to SMC, it was purely understanding what supply and demand was, and being able to buy from supply and sell from sell from supply and buy from demand, whatever. Um, and then I understood what order blocks were. Then it was a case of placing risk entries from the higher time frame. So how it started was I would have the 4 hour daily OB. I'll refine it down to the 1 minute. And is that my Discord? Let me close it. Then I refine it down to the 1 minute, whatever, and I place the order and then wait. Uh, and then during that, it was great. As in the everything went everything was going well. However, the win rate was not ideal, but the risk to reward was always good enough to for me to manage. What I mean by that is at that point, so I was already for about 4 years into trading. I was consistent to begin with, so taking that, having that low win rate, it didn't really affect me as much as long as I was growing my account at the end of the day, which was fine. But then it was a case of thinking, okay, how can we refine this? How can it make it better? And then I was introduced to confirmation entries, the standard break construction. This is before we even had the rule set as in what we have now. Like we had no structure rules, we had no OB rules, we had no rules. Everything that I learned when it came to SMC, it was all technical. It had so much discretion. It was unreal. And it was why myself, James, Ben at the time, and Nick at the time as well, we couldn't take the same trades because there was no rule set behind it. I was the only one that traded mechanical at that point, so it's hard for me to explain what I was seeing. It's hard for me to understand what James was seeing because I didn't understand things from a technical standpoint. However, when we moved on to doing confirmation entries, we realized it was even more discretion because what some of us classed as a breaker structure was very different. So what I saw as a breaker structure was different to James, and what James saw was different to me. Then we had to sort of understand, okay, how can we tweak this to make this a system that is repeatable in every single way? Because effectively, the way that the market works, in my opinion, is by patterns. Everything there's a repeatable pattern on a daily basis, depending on the time, everything, the time, the session, whatever. There's a repeatable pattern of how price moves. Price does not just go in one direction all day long. It just can't do that. And it's just about identifying those patterns being present, and then you take the trade as soon as your pattern is met. Now, patterns make it sound quite simple. It's just the easiest way to explain it. So then from there, it went from confirmations to introducing order flow, having a structure rule set, which is what we have now, which is why structure is so different to what you're normally used to. We also have OB rules. We also have order flow rules, mitigation rules. everything is should be as step by step and rule based as possible. But once you finish the course, you're sort of questioning, what do I, where do I start? What I suggest doing is, as I said in the prerequisite, is what I suggest doing is making sure that your foundation is correct to begin with. So make sure your understanding of structure, liquidity, OBs is all sound. So you're never going to be perfect, but make sure it's as close to perfect as can be. You can only strive for perfection, right? But even I still make mistakes when it comes to structure. And then it's a case of using the understanding and deciding whether you want to do swing trading, intraday, or scalp. Now, if you're going to do swing trading, as I said in the most recent weekly outlook, if you're going to do swing trading, you're only going to focus on the 4 hour daily and beyond. Okay, and then you're only going to trade when price reacts at that. But then you need to have a plan on what you're going to do when price enters that POI. Are you going to be, for example, say this is your 4 hour, when price comes in, are you going to do risk entries? Are you going to do a confirmation entry? Are you going to do inception entry? Are you going to do disruption entry? Yeah, disruption entry, whatever. Or you're going to do James's entry. And then it's a case of how can you personalize it to you, because not everyone can trade at all times across the day. And doesn't mean that you can't make things work for you. Just because it's not laid out for you, it doesn't mean that you can't be flexible with it. So this is where you can decide, I'm only going to trade London, right? And I'm only going to look, if price reaches this POI, I'm only going to trade during the London session. Or if you can only trade New York, I'm only going to trade during the New York session if price reaches that POI. If it doesn't, it doesn't. I'm going to leave it. Okay? A lot of you are having that problem of, if a trade is not present in your session, a lot of you are struggling to let go and not trade, which is a massive issue going forward, because if you can't let go now, you'll never be able to do it. You have to learn to have some sort of self-control. So that's one way you can see it. Even if you're going to do intraday, right? So if you're doing like 1 hour, 15 minute or above, right? So 15 minute to 1 hour, same process where you have your POI and then you just wait. Now then it's a case of, you can't trade all times out of the day. You don't know when your POI is going to be met. It doesn't have to be London. It might not even be New York. It might be during Asia. But because this is the time that you can't trade. I'm basing this on UK timing, because you're going to be most likely sleeping. Well, I'll be sleeping, to be fair. I would miss this entry. What would you do then? Again, it's the case of being able to let go and understand that that's not part of your plan. If you are one of those where you have a plan but you're only going to trade London and New York, and you happen to be awake during Asia, just say randomly you happen to be awake, and then you end up trading it anyway because you think, oh, price is in my POI, let's just trade it. That is not part of your plan. You shouldn't be doing that. If you're going to do that, then there's no point in you having a plan to begin with. Okay? Now, what you have in this Discord is everything you need to be profitable, but it's about how you use it. For example, some of you will be struggling with the disruption model. Some of you feel like it's not giving you enough trades, or it doesn't give you enough trades. For example, a lot of you are obviously fixated on prop firms. I get it, but you should be focused on being consistent rather than passing prop firms. Prop firms can come afterwards. Consistency has to come first. So say, because disruption doesn't give you enough entries, a lot of you don't give it a chance to even bother to try it, and don't have enough data to back whether this actually works for you or not. Okay, let's say that. But let's start off talking about that, for example. So the whole idea about the disruption is that you have your 15-second POI, for example, and then you're going to do a 1 second confirmation. Now, the first problem to begin with for a lot of you is that this is on the seconds time frame, right? That doesn't even look like it says seconds, does it? Hold on. Oh gosh, that's even bad. That's even worse. Okay, you know what I mean, right? Some of you don't even have access to seconds time, which is fine. But this is where lateral thinking has to come into play. You need to think, okay, so this is the rule set. The only reason why I use the seconds time frame is because I want to catch the move as early as possible. That's just my thinking, and that's the way I created the model. However, just because the model is created based on the seconds, it doesn't mean that you need to use the seconds. You need to be, if you're struggling to understand the fact that you can use this, you can use the concept on any other time frame, then you really need to think about how you can be independent. I can't make decisions for you. I can't tell you what time frames to use. You need to do. You need to understand. Okay, I can't do the seconds time frame. For one, I don't have the seconds time frame. I don't have that available to me. Not only that, for another reason, you might not be able to restructure the seconds time frame because it's not easy, right? And then you're thinking, okay, let's just scrap this model. Okay, I'm not saying the disruption model is the best one. I'm just basing this on because it's the only one that I trade at the moment. But what I'm trying to say is, just because something's based on seconds time frame, it doesn't mean you have to use it. But you need to find a way to do the same thing without using seconds time frame. So, for example, you can just do, I don't know, you can do 5 minute disruption, and then with a 1 minute confirmation entry. Same thing, but just different time frames. Now, obviously, don't take this as gospel. It doesn't mean that this is going to work, but every time you build an edge, or every time you're building any sort of model to try and fit you in, you need to begin with some sort of hypothesis, right? You need to think about what could potentially happen or what you've noticed has happened, and then it's about building an edge around it. So for me, the disruption model was based on the fact that our standard confirmation entry was obviously the two rules, and then I noticed that price would take out the SR, react off the IM, and continue. I noticed that this was happening quite a lot, and then I noticed that once this happened, when price broke structure again, price was coming back to this one more often than not and reacting and continuing. Then I understood that this could potentially be a model. So that was where the hypothesis was built. And then it was a case of months and months of testing. Like, bear in mind, I was testing since August on this one. It's still not officially released as a course, in the course, because I didn't think it was ready yet. It's ready now. To be fair, there's nothing more I can really add. But you can see, if you watch the breakdowns from August to now, you can see how much has changed. It hasn't changed too much, but you can see the difference in how much that model has changed. But it's taken that long. And I think a lot of you are thinking you can create a model just like that. Just because the rules are there, you can create a model out of nothing. It's not the case. You're going to have to spend time. If you don't want to spend the time, then don't trade. You shouldn't be here. You shouldn't be trading if you can't be patient enough. You don't necessarily deserve it. And which sounds quite harsh, but I guess I'm the only person that can tell you that straight. If you want this to work, you need to give yourself time. And if you don't give yourself that time, then you won't get any consistency. I was going to say you don't deserve it, but I guess you don't deserve it if you don't work hard for it. But it's best because it's made to look easy. Prop firms make 10% a month look easy. When I trade, when you watch my breakdowns, I probably make trading look easy, and it's just because of the experience and the time that I've had. It wasn't easy to begin with, especially when I was watching breakdowns. It wasn't even breakdowns, to be fair. It was like PDFs that he had. But from my first mentor, when he was showing me to trade, he would pick out the most obvious engulfing candles that I didn't even see, and I'm like, how did he see that? How did I not see it? You know, I understand it from your point of view, but I'm trying to explain that the only reason why I got consistent is because I'm not doing what my mentors have showed me. I'm doing what I've learned and understood by myself. I'm not saying that what we're showing you in Discord doesn't work, but it's the case that if the models that are already pre-planned for you, if they don't work, you can utilize the mechanical process to begin with. You can utilize our structure rule set. You can utilize our order flow mitigation rule set. You can utilize the models itself, the concepts of the models itself, to build something around you. But a lot of you are not struggling. A lot of you aren't opening your mind a bit to think about how you can make something work for you. This is what this video is meant to say, because it's meant to explain, because a lot of you are in this position. I don't know how else I can really explain what I'm trying to say. Okay, let's do this. Let's do this. Okay. Now, I won't use the seconds time frame. We'll just use 1 minute and above. I'm gonna try and see if I can build a hypothesis, right, for a potential edge. Okay, and this is how I began with everything that I've done. And the first thing to take note of is it's a bit easier and quicker for me to do this now, purely because of the time and experience that I've had, and I've seen things happen time and time again for me to be able to decide whether this is good edge or not, for example. But then it's a case of when you do it yourselves, you can't compare yourself to me in that case. I'm not saying I'm better than you, I'm just saying that I've been trading mechanically longer than most. Mechanical trading wasn't even out there when Vertex started, as in no one really knew about it. So, my mindset is to think mechanically. So I'm not expecting you guys to all think systematically to begin with. So give yourself some time. So don't compare the speed. But anyway, so the first thing you need to understand is I'm going to think about it this way, where I can only trade London and New York Open. We'll say both. Okay, so I want an edge that I can trade both sessions, if not just one. Okay, and I'm not gonna say how much I'm looking to make, because that's irrelevant. That in terms of choosing what, in terms of deciding what the edge can make you, that is dependent on the statistics afterwards. That's not something you start off with. So the first thing you need to understand is what you can trade. So for me, let's just say I can only trade London Open and New York Open. Let's just say I'm two people at the moment. So I can only trade London Open as person number one, and person number two can only trade New York Open. Let's just base it on that, because that's a bit more realistic, because not everyone can trade both sessions. I understand that. Okay, so let's just focus on. So I'm gonna try and see if we can understand it from both perspectives and see what we can do there. Okay, so and I don't have the seconds of time frame available to me. Okay, so we'll base it off this. So, and another thing I want to do is, so person 1 and 2, let's just call them Tans and James, because it's easier. Tans can only trade London, James can only trade New York. And not only that, Tans and James, they both want to trade as scalp or intraday trades. So they want to be in a trade and out of trade on the day. They don't want to be swinging the trades, which is fine. So realistically, you don't want to be trading, if you're going to do that without the seconds time frame, you don't want to be trading above the 5-minute time frame, for example. So I'll say for this case, we'll just use the 5-minute as the base. Okay, so let's just get the sessions indicated so we can, this one, it's going to show all of them, isn't it? I believe that should be okay. I'll wait for that to load. I don't know why my internet's been so slow recently. There we go. Okay, so we've got London and New York. We can get rid of Asia, we don't need that. Okay, so the first thing that we need to think about, so we need to think about what hypothesis that we have. Now, the way that you start this is just by looking at price. You look at price and you think, okay, what happens what seems to happen. Now I'm going to base this off disruption, because that's the most recent model that I've created to say that I'm happy with it. But the reason why it was devised is because essentially I can see that when price takes certain highs and lows, that sometimes you don't get a full-on follow-through when a price breaks by either a wick or a body, and then price reverses the other way, and that happens more often than not. But then it's about deciding how can you define, for example, let's just say this first example here, okay, how can I say that this break of structure, now obviously it's easy for me to say that it's gone bearish now, that this was just a fake out, for example, or it wasn't no follow through, or it was no price that, it's a fake break basically. How can I define that? So the first thing that you'll need to pay attention to, so this model that I'm trying to make, if I'm trying to make it, I'm not saying that this is going to be a good model or whatever. I'm just trying to see how I'll build it. If this ends up being good, then I might follow up on it, but we'll see in it. Anyway, so let's just say this model is all based about highs and lows being taken with no continuation, And the idea is we're hoping for price to take out a higher low and continue the other way. And we're looking to profit some way in that move, in the opposite move. So for example, in this case, where the higher was taken, we're looking to profit somewhere in this move. Now, because obviously I've already seen the price is bearish, it doesn't matter. Okay, it's all about when you're building a hypothesis, you need to see what happens, and then you can think about forward testing and see if this will happen continuously. But first, you need to spend a few hours just thinking, does this happen more often than, say, more than 5 times, for example? If yes, 5 times is probably a bit small, but let's just say build a sample data and say, okay, so I've noticed that this has been happening. How can I profit off this? That's the main question. How can you profit off this move? So we already have our hypothesis, which is the case that sometimes when price breaks a high and low, we don't always get a continuation. Sometimes price reverses and goes the other way. Okay, so we are looking to profit on that move. How can we define whether when price breaks this structure, how can we set a rule that this is not going to be a follow through? Because it's obviously easy to say now, but in live price, when this happens, there you go. When this happens, how can I say that okay, it's not just going to continue? That's what we need to decide. So that's something that you write down and keep on the back of your mind. Okay, that's something you write down and keep on the back of the mind. Now, what I am thinking is, because I've got these time frames available to me, so I've got between the M1 and the 5 minute. So I've got 1, 2, 3. Where's my 4? I don't think I've ever used 4. Let's put that there. There you go. So I've got between these time frames. How can I use this? So something that I remember when I was, I guess it's a little bit unfair because I thought about this before when I was trading disruption. My idea with disruption was that sometimes when I see a high low be taken, instead of waiting for this, which is what the disruption model is, I wanted to find a way that I can trade here and get in the trade before that's even happened, because not all you don't always get this all the time where price retraces all the way back to that OB and continues. A lot of the time, sometimes you just get a full-on breakthrough, or you get a price where it doesn't retrace all the way but continues lower. So I want to find a way that I can trade within there. Okay, so let's think about this case. So the 5 minute high was taken. And I'm going to follow structure. Let's just say we'll follow structure quite loosely, whether we're going to do minor or major, because that I can decide afterwards what works best. So whenever you're building a hypothesis, is you start off with thinking about things very loosely. And this is why everything takes so long. For example, the inception model was, we were working on it like 8-9 months. Well, I was working on it 8-9 months before you even saw it. The confirmation entries were working on way before Vertex was even created. Everything took a long time before things were created, just so I can give you everything that's presented to you is backed by statistics in one way or another, which is why this part takes so long, because you need to be able to confirm what you're thinking. So my idea is, once a 5 minute high low are taken, I want to see if I can get an entry in there. And the only times I'm going to look to trade is around London Open for TANs, and then James is only going to look for, sounds weird speaking in third person that way, but James is only going to trade New York. Okay, so let's go from here. So let's just say, okay, the 5 minute high was taken. How can I look for an entry within there? So let's just mark this out so I know. By the way, everything I'm saying here, I'm not saying this edge is going to be amazing. I don't know. It's just giving you an idea of the way that you should be thinking and what lateral thinking actually means. Anyway, so this was the 5 minute high that was taken, that was here, and then I could see this bearish move. So the idea now is, so based on the concept of disruption, is the fact that you're basically looking for price to take out a high and then continue. So the idea here, what I can see is that this is the first break of that 5 minute high from that wick. Now, the only thing I can see is that wick was taken out by this one, then price was bearish. So I can have this in the back of my mind that this could be the case where you wait for the 1 minute structure, whether it's a wick or a body, doesn't make a difference at this point. We can decide that later what works, but what we can understand is this the case of once this is taken, we can look to enter of the next one. How can we do that? So from this case, what we can say is that this was taken out, and then we can think about how can we enter this candle. And then my first go-to, when you have something like this, my first go-to is go through this most simple option of entering is, in this case, you wait for the candle closure, and I'm going to sell with a stop loss above, and then you think about, let's just say a rough, let's just say a 1 to 2 or 1 to 3. Is it 3 a lucky number? I think it is. I'll just say 1 to 3 for the moment. Okay. In terms of TPs, I'll speak about near the end. We'll speak about targets later, but let's just say for now we're only targeting 1 to 3, for example. Okay. So the idea is, so this is the very first foundation of a hypothesis. Just because this is one winning trade doesn't mean that every trade is going to be like this, doesn't mean that every trade is going to win. It's just a case that this is my first hypothesis. Then it's a case of understanding, does this work? Does this have an ideal win rate? And is this something I can repeat? And then can I create rules about this? Because the idea is now is because what if it was a case where you had this wick break up here? Okay, so that's our pretty much disruption. Price has been disrupted. But what if it was the case that, how can I say that this was not going to continue higher? How can I say that? So then it's about having a rule set. Is that inside the 5 minute? So remember I said, you know when that 5 minute was taken out? I don't know, it's so slow, man. Come on. You know when that 5 minute was taken out? This one. When this 5 minute high was taken out, I questioned, how can you decide that 5 minute is not just going to continue bullish? So what I can see here, and what I can see in the next one, is that, because if there was, for example, if there was any sort of break of the high, right? If price was to continue, you most likely get, for example, in this case, you'll get bullish candles following, or if it was to break any form of any low, for example, let's just say here, you'll get bearish. You get full on bearish candles. So in this case, we can say that for now that we have this broken structure, not break, let's just say, yeah, say we have this break, right, this bullish candle, next candle is bearish, so that could be an ideal way of saying, okay, this is not going to follow through, it's not going to continue to go higher because we've got a bullish candle, a very strong bullish candle, and then we've got a bearish candle afterwards. So it's showing that it's not exactly going to continue. The sellers are coming into the market effectively. Okay, that's just the idea. And then we could probably say, we could relate that to the same thing. I know this is just one example, but this is where you start understanding what you're intending to do. The same thing here, right? So when this wick was taken, it wasn't even taken by a bullish candle, it was taken by a bearish candle with a huge wick. Okay. The only thing I'm thinking now is if it was the case where we had another candle close here and then price would break up, would I enter manual execution here? That may be more risky than it should be. Okay, I guess the only other way I could think around it is if I was to place like a stop order, for example, where we'll only enter the trade as a stop order. So if price does break below, then we'll enter the trade. If it continues higher, then that's it. We've just mitigated that loss. Rather than just manually executing on that, that could work. Yeah, that could work. So that could be one example. So let's just say that. Okay, so that was London, right? So if we go to the 5 minute, I may have confused some of you by now actually, but I'll carry on and see. So let's just go what's the grey box? Is that, I swear I took that off. Anyway. Okay, so we're going to look for, so that was our hypothesis on this one. So this is what we need to look back and now see, does this happen again? And then we can think about, okay, this is probably a good model that we can continue testing and seeing whether it has an edge or not. So I haven't decided on structure yet. I haven't decided on whether I'm going to use minor, major, or whatever. It's just understanding that when price takes out a higher low, it's about catching the move that goes the opposite direction. Obviously, this price goes all the way, it just plummets, doesn't it? But this is, again, it's easy to say afterwards. In terms of targets, we can decide that after we do the testing. You can say, okay, so this is your own testing. So don't relate it to this, but relate to your own testing. You could think about what can you hit more frequently, which is the big thing in terms of increasing your win rate. Can you hit 1 to 3, 1 to 4, 1 to 5 more consistently than a 1 to 10, for example? If you can do that, then I personally, I would aim for the lower risk to reward. If you can do that consistently, the compound growth of say 5R or 2 or let's say 3R, compound growth of 3R or 5R alone is so high, it's ridiculous. But it's hard to see sometimes when you are used to seeing the big numbers. And I guess I don't know if I don't help to it, even though I guess I try to be as transparent as possible. For example, when you see like a 1 to 20 from me, I'm not exactly holding 20R because I've already taken partials of, I've taken loads of partials, so it's not even 20R. But that, you need to understand that it's not the case. Anyway, let's just say, okay, this is the previous day, and what we're looking for on the 5 minute is any sort of high and low to be taken. So if we carry on, let's just come into London. So we're just creating new lows. Hold on. We're just creating lows. Lows. Okay, so this could be one, for example. So let's say this low was taken here. Okay, we had one bearish, basically one bearish candle. I guess we can say that about all of them though. So this broke and then continued. I guess, okay. So the idea was now, when that low is taken here. Okay, we had bearish. Okay, so that was just continuation of the low. So we carried on forming a low, then we had a pullback, then this low. Okay, so let's look at this part here. So once this low was taken, we effectively, our rule set was to look at the M1. I should use the replay tool, shouldn't I? Hold on. I'll use it once it loads. When it eventually loads. Okay, there we go. So let's just do London. Should be easy. Okay. So price was here. So the first break of that 1 minute low was this one. And then we're waiting for this to be taken out. But when it does get taken out, price just continues bearish. So it wouldn't have given us an entry, I suppose. Or would it have? So we've got this, then we've got... So if we're thinking about from a minor and major point of view, we got this, and then this was taken out, but then we got two bearish, so this is bearish anyway. Okay, so yeah, it wouldn't have given us an entry here anyway, so that's one no entry. Based on the first rule set that we made, and by the way, I just made that up on the spot, so whether, I don't know if we'll even get I don't know if price will even replicate what I did there. I'm just trying to explain the hypothesis basically. Okay, so in this case here, what we can see is that a low is taken. Okay, we've got bearish and bullish. But again, in this case, it'll be the case of if price was live, we'll only see this break here. And then it'll be the case of understanding, okay, what we're going to do. So I think based on this, because it will cause confusion, and looking at the previous one, I think we'll have to wait for the next candle close and then look for the entry. I'm not sure yet. But let's just say this low is taken here, and then we could see if we can find an entry using the rule set that we made on the first day, on the first trade that we took. So this was the first break that we had, okay, and the next one what we had was this low is taken out, and then the entry was we're using stop orders, so it'd be a buy stop on this candle here with the stop loss below this. So let's just say 4, and you're targeting, we say 1 to 3 there. Yeah, okay. So that's using the exact same rule set of the first one. The difference between this and this is the fact that no low was taken out. So then it's about, okay, let's just compare the winning trades. Is this the same as the other one? Yes, it's exactly the same. So that means that was repeatable. Okay, now let's think about James, for example. So James can only trade New York. In this scenario, by the way, it's not real life. I'm just using our names as a reference. So let's just go to New York, and we're going to look for the same things of a high low being taken. So let's just say from here. Okay, so New York Open is here. We've got this high, got this low, and this low is closed here. So this low is taken out. So we can only see if there was an entry here. Okay, let's see if we get the same thing. So in this case, we have this low here, and then we got a high, and then we got a wick below. So this is, I wouldn't say that's the exact same rule set, because it's not the same as what's happened here, where we have the first wick in, then price takes that one out, and then we enter. Whereas in this case, we've got the first wick out, or that's the 5-minute wick out, and then it's the case of we have this minor structure range sort of coming in here, where we have this low high, which then gets taken out from here. Yeah, that's not really a rule set. So let's just say there's no trade using that rule set. But anyway, I'm not saying that was a good edge. To be fair, I got too into that. To be fair, I'm sorry, I was talking way into that. But what I'm trying to explain in this video is that you can use any concept that you have within this Discord. If you can think laterally and have an open mind and be creative about it, you can develop any edge around you and take on the mechanical concepts and use them for you. If you're struggling to do that, then use the models that are present for you in this Discord, because that's already been done for you and the stats are already backing the edges. But if it's the case where you need to find something, say, that doesn't use a second time frame, whatever, then you need to be more creative with it. It's not something that I can't create an edge for you, as in I can only create I've created an edge for you, but I can't make an edge individual for every single one of you, because for one, I can't do it for any of you because I'm not you, and it has to be based on your own understanding. I think once you understand and vision something yourself, there's no way you can't unsee it, and it's the only way that you could probably find any form of consistency. And from a course perspective, I get it, because I can only show you obviously what I do, and I can only show you the concepts of what I use and what I have used to build every edge that I've ever tried, every edge that I've ever used. Then it comes down to, it's up to you guys to be creative with it. If you can't trade using the exact same timing, exact same models, for example, as myself and James, then you need to be creative and use the rules in your own way. It doesn't matter where you go. It doesn't matter if you go to a different trading community after this, for example, because for some of you, you might see that it's only a seconds time frame. Then I see it. Some of you would see that a lot of the trades are based in seconds, and you just don't even bother finishing the course. You don't even bother trying, because some people don't think about the fact that you can use the concepts on any time frame. It's just the fact of making it individual for you. So before you go to another trading community, because quite frankly, I can only support you where if you try, I can only support you, right? But if you're not going to try and you want something handed to you, then I guess I can't really do anything there. So what I suggest doing is, before even considering about moving on to another community, again, if you do, then it's on you. I don't necessarily It's not that I don't care, but I can't do anything. I can't do anything other than say that it's no better anywhere else. You know, you're still going to be stuck with learning someone else's way of trading, and then it's the case where you'll try it. It probably won't fit with you because it'll be the same. It'll pretty much be the same process. Not saying SMC is all the same. Doesn't matter if you go to a technical edge. You'll be trying to take adopting someone else's rule set, for example, or someone else's technical edge, and then what am I trying to say? And then you'll be stuck in the same boat, and then you just spent another couple hundred or whatever you spent on them or on us or whatever, and then haven't got anywhere. So what I suggest is, you know, make use of the time that you have here in Vertex. Make use of myself. Make use of James. I can assist you making an edge, especially for you guys. Well, mainly for you guys in the mentorship because you guys have that direct access. For me in the access program, course program, obviously you don't have this, but you can work on it by yourself. But for you guys in the mentorship, you know, if you come with me with stats with potential edge, I will happily go through it with you to see how we can tweak it. But I won't do the groundwork for you. You're gonna have to do that because, quite frankly, it's not my place to do that for you. I've already done everything I could possibly ever do. Um, it's now down to you, and I think I've realized that this year that courses aren't always going to give you the most. The courses alone aren't going to give you everything that you need because thinking about my progression, I'm not even using what I've taught. I'm using everything that I've taken bits from everyone and everyone that I've learned from, um, and I've used my own understanding of it. I think that's the only part that makes me different from some of you guys, for example. But you guys can do the exact same thing. I'm not exactly smart. I'm not quick thinking. It's just the way I think is just that. You know, I need to make things understand. I need to understand things for myself rather than understand it from someone else's perspective because I can't understand it from someone else's perspective. But anyway, I hope this gave you an idea of how you start building an edge. I know this whatever I did here. I know it doesn't. It's not saying that it doesn't use vertex rules. It's incorporating disruption to an extent, but it's trying to find a way to trade the peak of disruption. You never know. I might be onto something here. I mean, that's only based on two, but I might be onto something. I don't know. If any of you want to try this, go ahead, go ahead and let me know. You know. But anyway, I hope this video was useful for you. Some of you guys who are stuck in that limbo phase, and if you made it this far, congratulations. I know I waffled for a fair bit, but anyway, I hope you have a great weekend ahead. Hopefully, this video uploads by the weekend. It should do. And take care of yourselves. Remember, it's a bank holiday on the Monday, so if you are going to trade, just be careful. Not be careful, just be wary that it might be a bit dry. I don't know. It's a coronation bank holiday, so it's a new one, so it'll be a bit different. Apart from that, there's nothing more I need to say really. Just in terms of an update about the announcement I made yesterday. I'm still in a bit of limbo myself. I don't really have any decisions or plans at the moment as to what's happening with me. So I would say make use of the time that I am full on active because I don't know what's going to happen in the next few weeks or months or so. I don't think it'll affect you guys as much, to be honest, because my activity has always been good, even with surgery. It just means that there'll be a few days where I'll be slightly less inactive, but slightly less inactive basically. But it won't change anything for you guys. But hopefully, this gives you an idea of how to think laterally and how you can make things work for you. And again, if any of you want to incorporate what I've just shown here and try, carry on with my hypothesis. Again, this is just a random made up edge that I've just done now. But if you want to carry on, then go ahead and let me know the stats. If any of you do it, if you see something like this, what will happen here in that 1 minute? Because I think you can use it could be an idea where you can use the 1 minute. Hold on. when it loads. And again, this is the case. I'm only saying this because this is what I can. What? What do you mean data point on? What do you mean? Hold on. Where am I? I didn't go that far back. Let's go here. There we go. Okay, 1 minute. If any of you do this testing, where is it? It was this one, wasn't it? See if you see this again, where you have the first load, then you have somewhat of a high being created, and a wick low is taken, and then you can enter there. If you see that, then let me know, because I don't know. This could be a decent edge. I mean, that's pretty. It's pretty easy. The fact that you can enter like that. Anyway, that's my go-to. You can once you've done that, you can refine your entries afterwards. But I guess if you like this video, let me know. I can probably do a follow-up to this to see how more I can how I can test this one and make this better. If this is one, but I'll only do it if you guys want me to really. Otherwise, I won't bother. But anyway, take care of yourselves, and yeah, have a lovely weekend.